and welcome to this edition, June edition of your Daily Five. I am your host, Mish Schneider. And in a sea of bad news for the market, and I mean bad news, we have had, obviously, anybody who's lived under a rock doesn't know, extremely high energy, gas and oil prices. And so I did a deep dive into alternative energy because there has been some interesting statistics about the fact that, first of all, we've had a record number of EV cars being bought with the ongoing high gas prices. Unfortunately, because of supply chain and demand being higher than the actual supply, we've also had a backlog of orders, and a lot of people are unable to get their EV cars for months. But there's also been a lot of talk with China, believe it or not, at the helm, at the lead, in terms of maybe it's really time, considering fossil fuels are necessary at this point, but we still really should be looking at alternative energy. So I thought that this would be a good opportunity to talk about alternative energy and for you to have an at-the-ready plan for certain stocks and ETFs that could be ready to set up. So here's the list of symbols we're going to cover. So let's start with TAN. And of course, I've got my real motion and leadership indicator plugins here. And what's so interesting about TAN is a couple of things. One is we had almost a perfect double bottom. So on the last dip, we took out the low that we had here in February, but immediately closed actually above it. So that was actually the next day when it gapped up, the first buy opportunity at 60. But of course, at that point, people were looking elsewhere, at probably not so much at the solar space. And yet, here we are now with the market actually coming off. We are over the 50-day moving average. So what does the other indicators tell us? Real motion tells us that we are still over the 50 and the 200 in momentum. We've sort of flattened out with momentum with the market kind of declining here. But at the same token, this is a perfect opportunity with its big outperformance of the SPY, that if we can get some kind of new dip in the market, which looks inevitable, where I would be looking to be a buyer, I would love to see a dip closer to about 65, 66. And if we can get that dip to 65, 66, that's where I would like to be a buyer. Do I think that I would be interested in buying strength right now? Probably not, because of all the overhead resistance and the headwinds in the market. But if we got a dip to 65, 66, then I think you would have an opportunity to say maybe that it has to hold 59.60. Now, the next symbol is also an ETF. Doesn't look as good because this is actually clean energy, not just focused on solar the way that TAN is. And with PBW, we never quite cleared that 50-day moving average, nor do we get that very beautiful double bottom that we had. In fact, this held up better in February than the rest. But now here we did have that nice bottom. Now what's interesting is the momentum is clearing the 50 before the price does, and it's showing leadership. So what would I do here? Obviously, we like to see a confirmation on the price with the momentum. If the momentum continues to hold over the 50, I would want to see two closes here over the 50-day moving average. And then I would be more inclined to be a buyer of PBW, probably have a stop somewhere under 49. Next chart is FAN, another ETF. Now, FAN is really interesting because it's more globally based. Global Wind Energy Index Fund. Now, this is wind energy. Those of you who know what's going on in places like New Mexico, where we live, the wind has been intense. And there was an article that came out last week that maybe it's time to start using some of that wind for energy. Duh. But nobody wants those horrible, I don't even think that are horrible, wind turbines in their backyard. But nonetheless, that too looks inevitable. And on basically higher oil prices, this rally, but you can see after 2 days of being above the 50, it actually started to fail it. And the momentum is coming down. So the question is, what would be the buyable dip here? I would like to see this hold, say, around 1780, 18. Maybe I would take another shot right away at that and then get out very quickly if it doesn't hold. The next one is a stock. I put this stock in here because it's an American stock. they actually supply for solar energy. This is for solar, right? So this is more equipment based, but nonetheless, you could see too, this did not get there in momentum the way we just saw in the other charts, but it is outperforming the SPY. And it never cleared the 50. So this to me would be also sort of a no-brainer with First Solar, which is, in this case, where I said in tan, I'd like to buy the dip. In this case, if this thing can have 2 closes over the 50-day moving average, then I think you would have an opportunity to get in with, let's say, a risk to about 68, 69. So we're watching for this. The US has been very slow behind the 8 ball, as you can see now as I compare it to Canadian solar as far as getting solar together. Canadian solar might be one of the better looking charts, although it's having an inside day as I speak to you below the 200-day moving average. It has cleared the 50. You can see the momentum is done better, not quite as much as I'd like to see, and of course the outperformance. So this too, if you did get, for some reason, a breakout over the high of this day right here, which is 33.40, and you wanted to take a chance based on the inside day breakout over the 200, I would probably say risk no more than under 30. That would be my basic risk point, because, you know, again, this market is still very vulnerable, and as we know, nothing can survive if we get any kind of hard sell-off. I'm thinking more we're trading range bound, and that's why these outperformers could be super interesting. Now, the next one we're going to look at is JKS, which is a Chinese solar stock. You can see that one's doing the best. So what I told you in the beginning was, of course, China is actually leading the charge in terms of solar energy. And right now, this actually did kind of take out all of its resistance here around 60, but you've got really good resistance here at 66. So the question would be kind of a risk reward. Maybe I would be looking at it over 60, looking for maybe a match to the highs. But again, I would almost prefer, when you're chasing strength in this sort of choppy market, for some kind of dip. Ideally, the dip would be to around 56. But on the other hand, if it holds 60 and you wanted to take a shot, then probably what you would say is get out very quickly, like if it breaks 59, risk that tight and see what you can get to the upside. And then the last one is a US stock I thought I'd show you, SunRun. And the reason why I'm showing this to you is because we're not only over the 50 on momentum, but we are also over the 50 here in terms of the moving average and the price. We did have a little bit of a topping pattern here where it touched the top of the mean reversion and came off. Hasn't quite done that in momentum. But here's another one to keep your eye on, around 24, 25. If that can hold up, this might be another one to keep an eye on if the market stabilizes. So that's really basically, to me, one of the best places to park your money, because even though solar has been so out of favor, the truth of the matter is at some point, governments will start to turn their attention to it. And of course, if China is already there, that means that European countries are probably not too far behind. As you can see, Canada is right there as well. And then, of course, the US will have to pick up the slack. Okay, that's it for now. Thanks so much for watching. You all have a great day. Bye. Bye for now.
Hey, Grayson Rose here with Stockcharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.